Hello everyone, this is Gracie here. In this video, we'll be discussing Chapter 2 Goods and Service Tax Framework and Definition. Under the Chapter 2, the first concept is Introduction to GST. So, Introduction to GST is nothing but Goods and Service Tax. The clear introduction of GST will be discussed in this video. So, in the completion of the video, the GST concepts and why was it introduced, when was it introduced, and what is its main target will be explained. So under introduction to GST, where goods and service tax is very much similar to value added tax, where tax is levied on the value addition in the goods and services which is rendered. So there is also input tax credit facilities available for the each supply chain of the goods from the manufacturer to the retailers and from to the consumers. So this supply chain will have input tax credit benefits provided. So this GST was first introduced in France in 1954, and today almost 160 countries adopted it, and many more countries are in process of adoption. So there are two systems of GST, that is unified GST and dual GST. Most of the countries adopt single or unified GST, whereas Canada and Brazil adopt dual GST. India also proposes to follow dual GST. When I speak about dual GST, where both state and government and central government taxes are subsumed as state GST and central GST, where both the state and the center has the power to impose tax based on the trading activities which is carried on goods and services. So the next slide we will discuss about history of GST. So this history of GST explains the journey of how GST was implemented. So on Feb 2006, first time introduced the concept of GST and announced the date of its implementation in 2010. So the first concept of GST was introduced in 2006, and where it also announced the date of its implementation. Then in Jan 2007, first GST study was made by ASCHOM, that is Associate Chamber of Commerce and Management, which was released by Dr. Shom. So the first study was started by Association Chambers of Commerce and Management in India. Then on Feb 2007, Finance Minister announced introduction of GST from 1st April 2010 in budget. Since then, GST missed several deadlines. The government came out with the first discussion paper on GST in November 2009. So the first paper based on GST discussion, which was brought by the government, was on November 2009. Then it also introduced the 115th Constitution Amendment GST Bill in the year 2011, but failed to implement GST. In 2014, NDA government, that is NDA is National Democratic Alliance government, presented the Constitution 122nd Amendment Bill on GST in Parliament on 19th December 2014. So this NDA government presented the bill on GST in the Parliament in 19th December 2014, where the Lok Sabha passed the bill on 6th May 2015 and Rajya Sabha passed the bill on 3rd August 2016. Finally, the bill received the assent of President on 8th September 2016 and became Constitution 101 for 101st Amendment Act 2016, which paved way for introduction of GST. Then, in the year of 2017, four bills relating to GST was introduced, which were introduced in Lok Sabha on 27th March 2017. So, what were the four bills which were introduced to relating to GST? Were in the introduced in Lok Sabha was Central Goods and Service Tax Bill 2017, Integrated Goods and Service Tax Bill 2017, Union Territory Goods and Service Tax Bill 2017, Goods and Service Tax, that is Compensation to States Bill 2017. These bills were passed on 29th March 2017 and received the assent of President on 12th April 2017. Then the enactment of Central Act is being followed by the enactment of the state GST laws by various state legislatures like Telangana, Rajasthan, Chhattisgarh, Punjab, Goa, and Bihar are among the first ones to pass their respective state GST laws. Finally, by achieving consensus on all the issues relating thereto, the GST is set to be implemented from 1st July 2017 across India. So this was the GST GST journey, which was started from 2000 and which was introduced in 2006. So in 2000, it was introduced, or the GST to be implemented, or the work on GST was started by Vajpayee, where it continued on from where it was introduced the concept of GST in 2006, and the journey passed on till 2017. From 1st July 2017, GST finally was implemented in India. So, where India adopts dual GST system, where state as well as central government as the right to impose tax, or the as the authority to control over their state, and the center as the power to control to over the center. So state legislatures like Telangana, Rajasthan, Chhattisgarh, Punjab, Goa are among Goa and BR are the among first ones to pass their respective state GST laws. As the history of GST is being discussed, I would like to also explain the concept of GST. So, before explaining the concept of GSTs and getting into how GST works, let us learn some examples of the before GST regime and after GST regime. How was GST or tax was calculated? So, the other concepts will be clearly understood after getting through these examples. So, the first example. This was under earlier tax regime, that is before GST. If goods are manufactured for rupees 2000 and excise duty was payable at 12.5% and VAT was payable at 14.30%, the billing was done as under. So before GST, as you all know, what are the indirect taxes, where excise duty was charged on manufacturing goods, and after manufacturing goods in the distribution section chain, the value added tax was charged. So the earlier regime calculation was like this, where assessable value of the goods under excise law was rupees 2000, that is the manufacturer's cost, which is 2000, where he charges excise duty and collects it from the distributor. So excise duty of 12.5%, which will give us 250. So 2000 plus excise duty 250 will give us 2250. So this is the total tax, where when this goods are moved from the manufacturer, the distributor gives 2250 and buys the product. So when the distributor buys the product for 2250, he charges VAT to the from the retailers. So that is, distributors nothing but can be considered as wholesalers, where when he is moving the goods, or when he's selling the goods to the retailer, he charges VAT at 14.30%, which gives to 321.75. So with the so this amount includes the cost plus plus the distributor or wholesaler's profit plus the value added taxes imposed on it. So the total invoice value where the shopkeeper or retailer buys is at rupees 4821.75. So when we look into this example, the cost price plus the tax, and which is the cost price plus the tax, which the manufacturer sells the goods and receives 2250 from the wholesalers, where this 2250, where he charges profit, wholesaler adds on profit along with the tax what he is paid, and again the tax for the current goods, VAT is charged, and overall cost plus profit plus tax is fully collected from the retailer. So then the retailer again imposes tax and collects it from the consumer, where this is known as cascading effect, which is known as your cascading effect. So when we next look into the calculation of GST calculation, here the manufacturer cost the goods cost is 1 lakh, where he starts imposing GST at 18% on 18,000. So before GST it was excise duty and other taxes, but after GST it was only GST calculation and percentage to be imposed on it. So on 1 lakh, 18% of GST will be charged, where the distributor will pay the tax to the government and buys the good. Cost price of the goods is 1 lakh. So when it comes to the distributor, the cost price is 1 lakh, where he charges his profit 11,200, and on that he will charge GST. But in the earlier regime, 1 lakh is the cost price, and the distributor also adds 18,000, and then the profit will be added to it, and then GST, and then VAT will be charged. So where it keeps on adding based on the tax imposed, again a tax will be imposed. But when it's GST calculation only on the cost and the profit, that is the value added item, like the cost plus profit, on that GST will be charged, where it doesn't create the cascading effect, that is tax on tax. So on the sale price which has been distributed, or which has been decided by the distributor, that is 1,11,200, GST will be charged at 18%, which will give us 20,016. Then when the distributor is distributing to the retailer, the cost price is where the cost price at which the retailer will be buying it is 1,11,200. Obviously this GST will also be paid by the retailer, and when it comes to the retailer, he will add up the profit 24,640, and the total of it he will charge GST at 18%, which is 24,451. When you look into this difference here, only the cost and profit is taken into consideration, where the tax is not added here to again charge the GST by the retailer. But in the previous regime, the tax which is being paid by the distributor and the tax which is paid by the manufacturer will also be added on and accumulated, and then again tax will be charged by each distribution chain. But when it is in GST terms, there is only the tax will be charged on the value added, that is the profit on the cost. So here, when it comes to the final consumer, the cost of the product will be 1,60,291.2. Wow, how did we arrive to this 1,60,291? Is 1,35,840 the selling price of the retailer, plus tax will be paid by the consumer. So in this distribution channel, the manufacturer and distributors tax will not be accumulated, whereas the retailer's tax only will be paid by the consumer. But in the earlier regime, the tax paid by the manufacturer, distributor, retailer, everything will be collected from the consumer. But when it comes to GST regime, only the retailer's tax payment will be collected from the consumer. So this value added chain will be eliminated, that is tax on tax effect will be eliminated. So this is the difference between the calculation of your older regime and your current GST calculation. So this is the major difference, which is your cascading effect will be avoided, that is tax on tax effect. So now when we get into the concept of GST, you will understand clearly what is it. So the first concept is value added tax. When I speak about value added tax, GST is a value added tax levied on manufacture, sale, and consumption of goods and services. Yes, so which the worth of the product is being is charged, or the on the value added, that is on the profit, the tax will be imposed. So on the as it is imposed on the profit, it is your value added tax, where GST is a value added tax levied on manufacture, sale, and consumption of goods and services. Next is, it is a continuous it is a continuous change of tax credit. GST offers comprehensive and continuous change of tax credit from the producer's point or service provider's point up to retailers level, consumers level, thereby taxing only the value added at each stage of supply chain. As I've told, each supply chain, or during the supply chain, there will be the benefit of input tax credit facilities. So how this tax credit works is, so whenever the distributor, or when we look into this example, when the manufacturer, here the distributor pays GST, pays the tax of 18,000 to the manufacturer, and the retailer here pays to the distributor tax of 24,451. So when distributor is paying to the manufacturer, that is they don't indirectly pay to the manufacturer, it is like it is payable to the government. So when they pay like this, they will set up and they pay only how much is payable. For example, where from the distributor's side he is responsible, where he is responsible to pay 18,000. And this retailers, when he is buying goods from the distributor charges 20,016, which is liable to be paid by the retailer. So already 18,000 is his tax, and the tax what is he collecting from the retailer is 20,016. So the balance 18,000, that is 20,016 minus 18,000, where the distributor will only be paying 2016. So this is the input tax credit facilities. It is like a deduction in the tax what is paid and the tax what is being collected by the distributor. So the tax which is to be paid by the distributor is 18,000, where he has to pay it to the government officials, that is GST government officials. Then he is collecting from the retailer of tax 24,451, which is also to be paid by the to the government. So what he does is the tax what is he already paid, which is 18,000, and the tax which has been collected from the retailer of 24,000, I'm sorry, 20,016 will be deducted, and only that balance will be paid by the distributor. So what is the balance is 20,016. So this is the input tax credit facilities what they avail. So about this input tax credit facilities what is available under GST, you will be learning it in detail in the upcoming chapters. So now let us get into the concepts of GST. Then you have burden borne by the final consumers. So we are burden borne by the final consumers. The supplier at each stage is permitted to avail credit of GST paid on the purchase of goods and services, and can set off this credit against the GST payable on the supply of goods and services to be made by them. Thus, the only final consumers bears the GST charged by the last supplier in the supply chain, the set off benefit at all the previous stages. So as I have explained in the GST calculation, there is no burden of tax on tax effect here, but there will be only the burden to the consumer, where the retailer will charge his profit and tax on the consumer, but the previous supply chain will not add on tax to the retailers. Only the retailers tax plus profit what is being paid by him will be collected from the consumers. So this is the burden borne by the final consumers. But when we look into indirect tax regime before GST, the full supply chain will be added on. The tax on which is imposed on the full supply chain from the manufacturer to the retailer will be charged on the consumer. But when we come to GST calculation regime, the final consumer is borne, but not to the extent of before GST regime. So next is, and also input tax credit facilities is being available. So the next point is no cascading of taxes. Since only the value added at each stage is taxed under GST, there is no tax on tax for or cascading of taxes under GST system. The GST does not differentiate between goods and services, and thus the low are taxed at a single rate. So now when we come to no cascading effect, yes. So in this GST calculation, if you look onto, the manufacturer's tax will not be collected from the distributor. The distributor's tax will not be collected from the retailer, but only when the retailers only the shopkeeper collects his tax from the consumer. So there is no add-on tax on tax effect from the in the previous supply chain, that is before retailers. So this avoids major cascading effects. So this is the concept of GST. So which is where the profit, only on the profit what is being earned, profit plus the cost, the tax will be charged. So it is value added tax. Then continuous change of tax credit. So there will be continuous change in the tax credit which has been available. Then this burden is borne by the final consumers, as there is no tax on tax effect in the supply chain, but previously to the retailer, only on the retailer's tax will be imposed by to the final consumers. So the burden is borne by the final consumers of the retailer's tax. Then the major of cascading effects will be removed from the GST calculation. So after the discussion of concept of GST, we'll get into the what is the meaning of GST in India. So as you all understood the concept, the meaning would be simple. According to Goods and Service Tax Act 2017, GST is a tax on goods and services with value addition at each stage, having comprehensive and continuous chain of set of benefits from the producers or service providers point up to the retailers level, where only the final consumer should bear the tax. Yes, as I've explained in the concept of GST, the same thing is applicable in the meaning according to Goods and Service Tax (GST) Act 2017. So the tax is imposed on goods and services with value addition at each stage. That is with the value addition, that is with the profit added on to at each stage, having a comprehensive and continuous chain of set of benefits. When I speak about the chain of set of benefits, it is with availing input tax credit for the tax which is being paid by each distribution channels from the producers or service providers point up to the retailers level. This benefit has been enjoyed, where the only final consumers should bear the tax. So as the meaning is understood, let us get into more detailed explanation or study on GST. So taxes subsumed under GST. So the tax is subsumed under GST in the sense the taxes which are being replaced under GST Act. So central taxes to be subsumed and state taxes to be subsumed. As I've explained in the introduction of GST, which I stated that GST, India adopts dual GST system. So when India adopts dual GST system, where central as well as the state as the administration power over GST or implementation of GST in both central and state level. So in such case, then the other indirect taxes would be replaced by GST both in central as well as state level. So under central taxes to be subsumed, central excise duty is replaced by GST, additional duties of excise duty levied under Medicinal and Toiletry Preparation Act, Central Sales Act, additional duties of customs, service tax, surcharges are being replaced. Then when it comes to state taxes to be subsumed, state VAT, sales tax, purchase tax, entertainment tax, entry tax, taxes on lottery, betting and gambling, luxury tax and surcharges and cesses are replaced under state taxes to be subsumed. Next, taxes that are not subsumed after GST. This is the taxes which are still continuing after GST. So, what are the taxes which are still continuing after GST are basic custom duty. As you all know, custom duties are the duties which is charged on the imports of goods from another country. So, it has still not been replaced by GST. Then export duties, stamp duties. As you all know, the export duties are always nil, and there are certain charges to be charged where in certain goods when export duties, where this is only for the benefit of the exporter in order to safeguard his goods. Next, stamp duties. So stamp duties where every registration of the property, the document should be printed on the stamp paper to ensure that the stamp duties are paid to the government and the properties are being registered. Next, electricity duties. So electricity duties are charged on the electricity which is used based on the units which has been consumed. So this is electricity duties are charged by the government to make a note of all the subsidies. Subsidiaries are also financed. Next, taxes on professions, traders, calling and employments. Yes, still professional tax and other employment taxes are being charged and which is not being replaced by GST. So these are the taxes which is subsumed under GST under the central level and state level. Then the taxes which are not replaced by GST are subsumed after GST. So next, let us get into the model of GST. So under models of GST, it is divided into Single Indirect Tax Act and the Dual GST model. Under Single Indirect Tax Act, which states that GST shall subsume all the taxes, all the above taxes, except the basic custom duty that will continue to be charged even after the introduction of GST. Other indirect taxes such as stamp duties, etc., like electricity duties, also shall be continued is what is stated in Single Direct Indirect Tax Act. Next, under the dual GST model, which states that there is administration power given to the center as well as the state government to administer over GST. This makes GST will extend to all of India, including Jammu and Kashmir. Why is it applicable? Why GST will be applicable in Jammu and Kashmir is only when after the state assembly passes a special law accepting the use of GST in Jammu and Kashmir. Only then the GST will be implemented in Jammu and Kashmir. This is because Centre's law will not be applicable in Jammu and Kashmir unless the state government gave its consent according to special status of Jammu and Kashmir under Article 370. So all the states are all over India, all the states of all India, including the states of Jammu and Kashmir, are adopting GST. So as the states as well as the center is managed, we come under the dual GST model. So under dual GST model, what are the different types of GSTs? What are we going to learn is when we get into these GST structure, we will understand what are the different GST models we will be learning. So the center and the state will simultaneously tax goods and services. Center will have the power to tax interstate, and well as the state level will have state SGST will be charged with intrastates. So now we're looking into the goods GST structure. We will get into what are these different GST which is charged all of India. So goods supplied or services provided is divided into three: within the union territory, within the state, and between states. So when it is within union territories, so when I speak about union territories, as the state government or the center government as its own government, in the same way the union territories also have their own government, which is union. You It also has its union government of India. So when there are nine union territories, as of now there are 8 union territories. Like for example, Andaman Nicobar, Puducherry, Lakshadweep. So these are the some of the union territories. So when there is state or goods and services which have been exchanged within the union territories, then CGST and UTGST. So when I speak about CGST, is nothing but Central Goods and Service Tax, so which is levied and collected by the central government. So UT GST, which is levied and collected by the state government. I'm sorry, which is levied and collected by the union territories. So here both involvement of center as well as the union territories government involvement is there when there is trade happening or goods and services are exchanged within the union territories. So next is within the state, that is intrastate delivery of goods and services, where the collection by the GST Act is CGST and SGST. So which is central GST and state GST will be collected. So central GST, that is which is levied and collected by the government, as well as state GST, state which is levied and collected by the state, where 28 states all are adopting GST here. So when the GST is adopted, or any GST or which has been collected within the state, then both CGST and SGST is applicable to be charged on that goods and services cost. Then between states, when there is interstate sales of goods and services is carried on, then IGST, that is integrated goods and services tax, which is levied and collected by the central government. So now these are the different taxes which has been collected under CGST and CGST, UTGST, CGST and SGST for within state, and between state it is IGST. So the examples which is given to this is for interstate sales, that is from within Bengaluru to Mysuru. So Bengaluru and Mysuru are the places which lies within the state, that is in Karnataka. So it is known as intrastate supplies, where C plus SGST will be charged. So when there is between states, that is Chennai to Mysore. So there are two states here, one is Tamil Nadu and Karnataka. So two states involvement, then it is interstate supply, where it is outside the state, where two states are involved, then IGST, that is integrated goods and service tax, which is governed by the central government, and both state will be involved in it. Next, when it comes to Union territories, both CGST and Union Territory GST will be charged. So when it comes to exports, that is from Bengaluru to Paris, then no taxes will be imposed on it. So this is the structure of GST. So the next topic what we are going to discuss is how the transactions were working under new regime, that is when during GST period and the old regime before GST, and how was the revenue distribution made. So as we learned what is CGST, IGST, when is CGST applicable, when is both C and SGST is applicable, and when is IGST applicable. This table will also give us clear explanation about how CGST and SGST works. So sale within the state, when I speak about sale within the state, we charge two types of tax, that is CGST and SGST under GST Act. So now sales within the state under new regime we started CGST plus SGST, but before GST, that is old regime, VAT plus central excise or service tax was charged. So how was the revenue distribution to the government is, revenue will be shared equally between the center and the state. So here both the center as well as the state will be collecting. So when we look into interstate, that is between states, only IGST is calculated, where integrated goods and service tax is being collected, where this will be collected by the center. So when it is collected by the center, when it has been collected by the center, you can have a question stating that when there is within state operation, that is between the state, then only SGST can be charged. Why is CGST or why is center involvement here? But when there is between states, that is between other states, why is only center involvement here with IGST? Yes, so the allocation is explained here, where sales to another state, IGST is charged, but in the older regime, sales tax plus excise or service tax was charged. So the revenue distribution is, there will only be one type of tax in case of interstate sales, that is IGST. The center will then share the IGST revenue based on the destination of goods. So as there is state involvement, different states involvement, the center will be in charge of collecting, that is the center will be in charge of collecting IGST, and then the distribution or the allocation of the revenue will be distributed based on the destination of the goods, in which state the goods have been delivered. So there is no need to worry why when it is state center is involved, and when there is interstate there is no involvement of state here. So state will be given importance even in between states or interstate sales, but the allocation will be based on the destination of the goods where it is being delivered. So the next what we are going to discuss is the percentage or GST rates in India. So GST rates in India are classified from 0%, 5%, 12%, 18% and 28%. So this classification is done basically on the essentials to the luxury items. So it is based on the essential goods the taxes are charged, and it keeps on increasing based on the luxury level which has been enjoyed based on the hierarchy levels. So what are the goods which is being taxable under this hierarchy level is sugar, tea, coffee and edible oil will fall under 5% slab, while cereals, milk will be part of exempt list under GST. This is to ensure that basic goods are available at affordable prices. However, instant food has been kept outside this bracket, so no relief for Maggie food. So it is instant foods will be kept out of this 5%. Only for the basic requirements, the GST slab rate will be 5%. The council has set the rate for capital goods and industrial intermediate items at 18%. This will positively impact the domestic manufacturers, as seamless input credit will be available for all capital goods. Indeed, it is a time for Make in India. So as this council set the rate of capital goods and industrial intermediate items, so related goods as capital goods which has huge amount, with the goods which has designed with which comes under part of luxury items, and which are industrial items are put under 18%. So the impact on domestic manufacturers are seamless input credit will be available for all capital goods. Then coal will be taxed at 5% against current it is 11.69%. So They will prove beneficial for the power sector, and heavy industries will rely on coal supply. So this will reduce inflation, except a good run for Coal India tomorrow. So it will lead for a good run of Coal India tomorrow. Then toothpaste, hair oil, and soaps will all be taxed at 18%, where currently they are taxed at 28%. Most of the cosmetics and fast moving consumer goods brands should get the benefit of this tax reduction. Then from neighboring sweet shops might lose some of its flavor, as Indian sweets will now be taxable at 5%. For restaurants serving alcohol, the tax bracket will be 18%. Education, healthcare are going to be exempted from GST. Services on non-AC restaurants will be 12%. So these are the additional or few other items which are mentioned in the council's announcement of rates. So these items and the applicable rates are as discussed. So next we will be discussing the overall saline features of GST. What we have discussed up to now in this video will be briefed out now point wise. So please listen to it. So as we discussed, the following will be the saline features, where we discussed that GST or goods and service tax will subsume central indirect taxes like excise duty, countervailing duty, and service tax, as also state levies like value added tax, octroi and entry tax, luxury tax. So this is what we discussed in the video. And the second point what we discussed are the final consumers will bear only GST charged by the last dealer in the supply chain, that is the retailer, and the customer is the last dealer in the supply chain, where he will bear the GST with the set of benefits at all the previous stages, where the other previous chain, that is from the manufacturers, will have the set of benefits, that is availing input tax credit. Then we also discussed applied to all taxable supplies, that is the applied GST is applied to all taxable supplies of goods and services, as against manufacture, sale, or provision of services made for a consideration. So exempted goods or services, common list for CGST and SGST. Goods or services or transaction below the thresholds will be discussed in your later coming videos. So we discussed what are the goods which are taxable under different percentage. Then it will have two components: central GST levied by center, and state GST levied by states, and integrated GST by the center again for interstate transactions. Then we discussed, however, only center may levy and collect GST on supplies in the course of interstate trade or commerce. The tax collected would be divided between the center and the state in a manner to be provided by Parliament on the recommendation of GST Council. So the upcoming videos will be learning what is GST Council. So but we have learned how this IGST, that is interstate supply, how will it be distributed. So based on certain allocation which will be decided by the Parliament on the recommendation of GST Council, it will be distributed. That is what we learned in this slide, which will be distributed to the respective destination of the goods, where it is being delivered, to which state it is being delivered. Then C and SGST on interstate supplies of goods and services in India. So we discussed C and SGST will be charged on interstate supplies of goods and services in India. Then IGST, which is integrated on integrated GST on interstate supplies of goods and services in India, levied and collected by the center, is also discussed. Then IGST is applicable to import of goods and services, interstate stock transfer of goods and services. Then export of goods and services, that is zero rated. All goods or services likely to be covered under GST except alcohol for human consumption, state excise plus VAT, electricity duty, uh, real estate tax, which is also discussed in this slide. So where all exempted export of goods and services is, which is zero rated, where there is no tax, but all goods and services which is covered under GST except these items like Alcohol for human consumption, state excise plus VAT is charged. Electricity duty is charged. Real estate stamp duty plus property taxes are charged. Petroleum products to be bought under GST from the date to be notified on recommendation of GST Council. So, who is GST Council and what is the constitutional framework will be discussed in your upcoming videos. So, thank you everyone. Please go through this introduction of GST and understand the basic concepts of each and everything in this video.